Sir, at Sameeksha Capital, how do you shortlist stocks, and how does a shortlisted company become a portfolio company? Essentially, idea generation to idea selection. In other words, when does Sameeksha Capital press the buy button?
So, we have a universe of, I think it's more than 1,000 stocks, for which we have created our financial model, and those are automatically updated for quarterly results.
Wow.
Using our in-house technology. So at any given point, we have that universe, with the latest financial data available to us on which we can run various screens. And from time to time we run this screen. We run this actively during the result season. We identify, the software tells us which companies have reported interesting results. We have fed some criteria to the software. So it tells us that these are the companies that have come up with interesting results. And then the relevant analyst would decide, basically, whether he wants to, or he or she wants to work on that company, giving reasons, and if approved, then they can go and do some more work on those companies. In addition, when there are some significant market movements, for example, recently we had a big correction, we would go and rerun our screens to see if something else has become interesting. Apart from that, we find huge value in interacting with other investors in the market who we think are doing good job. There are many. We attend investor events, conferences, and there we might come across company or discuss company. We look at IPOs, though we don't really invest directly in IPO in the PMS for very some technical reasons. We definitely look at every single IPO as much as possible, to see if there is some potential company that we could invest in once it gets listed. So there is and then obviously, you kind of observe something, come across, it's like what I call Peter Lynch moment. You use some product or service and you thought, what about the company? This company, is it listed? What about, investing in that company? So that can also happen. So a short list of ideas, if I can say so, is generated using all these various means, and that list is then prioritized based on the potential attractiveness of an idea, and then we do a hierarchical approach to our analysis. We call ourselves in a business of eliminating ideas, because very, very few companies are going to meet our investment criteria. So we first do what we call market implied valuation. What is market telling us about the value of this company? The kind of growth, the kind of profitability that market is implying, is it realistic or unrealistic? So if it looks like it's something completely out of our zone, then we would put that company on the hold. But if it looks interesting prima facie, then we'll go into our first level of work, which is building a particular details of financial model, and going through our checklist. We have a very elaborate checklist comprised of questions that we like to ask about a whole different aspects of a business, qualitative and quantitative, the past track record, corporate governance, management quality, business opportunity, competition, and so on. And we would, so the relevant analyst would do that work, build financial model, and come back with a view that would be presented to the entire research team and the investment team leaders. And they will receive some feedback, and then go back and finish that. And at that point, we have some initial idea of whether or not we want to invest in that company. In some cases, we have enough information to start investing, and then we might do so. In other cases, we say that we need to do detailed work, further work. So then there is another level of list of questions that we pursue. We try to also scope out the industry in detail. What is the industry growth opportunity, and how does it fit into this company? And we complete that. Obviously, in this entire process, there will be interaction with the management. that goes without saying. It can happen once, multiple times if required. And we are fortunate that based on the name that we have built in the market, we are able to get access to most of the companies and their management. And when the process is complete, and if the stock meets our investment criteria, as I mentioned earlier, the expected return over next 2 to 3 years, is it same or above our required rate of return? And this we derive using what I believe is the most robust uh, valuation framework, which is discounted cash flow analysis. And if it meets our criteria, then we would consider investing. Now, apart from deciding to invest, we also then need to decide how big a position we want to make. And there we bring in a whole new set of risk management rules. Depending on the liquidity in the stock, we would decide how big a position we want to build. If it's a illiquid stock, we would restrict ourselves to a small position. If it's a very liquid stock, we could build a much larger position. That I think has worked really well for us because there are times when we make a mistake, and in fact, as it turns out, if we realize we have made a mistake and we want to exit, uh, if we build a large position in small cap, it would be impossible. So I think while we might have uh, left some money on table, maybe by not building large positions in some small cap, I think overall it has worked out very well and is reflected in our very strong performance in down markets. Our downside capture over last 5 years is just around 50%, which I believe is perhaps among the best in the market, even compared to some of the best name mutual funds.
Thank you for such an elaborate answer again, sir. It really helps incoming clients understand how detailed is the process for a shortlisted company to become a portfolio company. And also, I believe there is like a 120-point checklist that Sameeksha Capital follows.
Yeah.